Welcome to investingnews.com. We're once again joined by Simon Wensley from Metro Mining. Welcome back, Simon.
Good morning. Thanks for having me.
You're welcome. First of all, for investors, how will the sales price for future bauxite shipments be negotiated?
Well, bauxite is still negotiated on a bilateral basis between buyer and seller. There isn't really a live index that is used for trading or for price setting. There are some consultants who set out the pricing that they're hearing in the market or are seeing from their analysis of shipment data. But effectively, it's set between buyer and seller. It's a bit like iron ore and coal was 20 odd years ago when I was sort of starting my career in commodities. So, and the reason for that is that quite often the refineries that we sell to have quite specific technical assets and settings in their refinery, which mean that they can get quite different outcomes from a value in use basis depending on the bauxite and the blend of bauxite that they use. So each refinery has a different, I guess, perception of value, and so what we try to do is work with those customers and refineries that see the best out of our bauxite, are able to extract the highest yield to get the best amount of alumina and to limit the amount of silica. We also look at, for example, those that have deep water ports that can take the very largest vessels, because we are able to load the largest Cape-sized variant, which is Newcastle Max, a 210,000 tonne ship, and so those customers who can take that and are sitting pretty close to the ports also get extra value from buying from Metro Mining. So there's a number of factors involved. We then set up a contract with those customers that effectively can go forward anything from 1 to 4 years, and that will generally set out the volumes and the quality that we intend to send to them, and it'll have things like bonuses and penalties if the quality of each shipment doesn't sit within a range. So look, it's quite a complicated contract, but it effectively is tailored to each specific customer. Then when the season comes forward, pricing normally looks out somewhere between 3 and 6 months, depending on the customer. So we will effectively sit down with the customer. So Metro has a fully local located, China located team. Most of our sales go into China. We have a team based on the ground there, and they will broker these meetings, and I often also go out there to meet and have these discussions face to face. And we'll usually then set pricing forward 3 months or 6 months, sometimes rarely a year. We have had some other variants in terms of pricing. We've seen some contracts that have been linked to the alumina price, so the price that our customers use for selling their product, and that obviously has a benefit for them from hedging. I guess they're one of their key raw materials, but that's tended to sort of fall away in the recent past. So generally, it's set 3 months in advance against a frame contract. So that's how they're negotiated, and the sort of the basis on which we tend to look at those customers with whom we sign the contracts.
So touching on those points, Simon, is there capacity to increase total tonnes shipped and sold?
Yes, correct. So what we try to do is obviously match our forward-looking capacity with the structure and size of the contracts. And of course, customers may go through periods where they can't take all of their volume. I mean, maybe they go and have a large maintenance shutdown or whatever. And so we tend to build in a little bit of fat into the volumes. We also, because of other circumstances such as maybe inclement weather at the end of the season, has happened this year, this year just gone. So there's some flexibility, I guess, built in. Quite often we build in optional cargoes into those contracts. So by mutual consent, we can place an additional cargo into the contract. So we're able to effectively, we tend to try and negotiate, have sort of 3, 4, or 5 maximum contracts, I suppose, in the portfolio, and that then that tracks our capacity. And over the last 3 years, what we have done is just built up those contracts. A couple have been with very large suppliers, so we're sort of a small, as very, very large customers, so we're a very small portion, I suppose, of their total take. And some are with smaller customers where we're actually quite a significant part of their baseload raw material. And so each one has then a very different, I guess, view. And we try to build a bit of diversity in terms of our customer mix, so that, if the market changes or, one particular customer has to defer cargoes, that we've got, some additional flexibility built in there to be able to continue to keep the mine going on that sort of monthly, quarterly, and annual basis. But as we look out over the next sort of few years, for sure, we're still seeing the market grow, and the market dynamic is a relatively positive one, where what we're seeing is particularly in the largest traded market in China, we're seeing older inland refineries get challenged by rising costs, by the lack of local bauxite that they have, and also through things like red mud storage, etc., environmental pressures, etc. So the older refineries are starting to close, and what we're seeing is a new wave of refineries being built on the coast, and that is excellent from our point of view. They are almost all building in technology that is quite flexible in terms of its ability to take different types of bauxite, and so those new refineries, and for example, there are slated to be 3 or 4 new refineries starting up this year in along the coast in China, probably over 10-12 million tons worth of alumina capacity. So putting that in context, that's going to be roughly 30 to 40 million tons of additional bauxite demand coming from those coastal refineries. And so, those are the sorts of ones we're also, targeting to get 1 or 2 of those into our sales mix as we move forward.
So touching back on the company, Simon, what is the current life of mine, and how could this be extended?
Yeah, so we have a reserve base at the moment, which roughly runs for about sort of 10, 11 years. So, just over 70 million tons of bauxite. However, what we do have in and around our current mining areas is another 40 million tons of resource. And so we're working on, that tends to be, at the moment, it's constrained more by grade rather than by anything else. And so we're working on options to upgrade that material to be able to bring it into the reserve base. And so, as I said at last year's AGM, we are working on different types of screening technologies and beneficiation type technologies. So we're looking at what might be an application of that within Metro's current mine footprint. However, we also have a number of exploration properties around the place. There is a large set of tenements just north of where we're operating at the moment, on the northern side of the Skardon River, which we started exploration on at the end of last year. We have a tenement just to the southeast of us, which was part of a former feasibility study from a previous bauxite miner, and so that's been still sort of, we know that property's been extensively drilled, extensively studied, and we know exactly what the bauxite looks like there. So bringing that into reserve would also require us to prove the feasibility of some of these upgrading technologies. And then we also have a number of exploration properties further south. So south of Weipa, we have quite near the Aurukun town, we have a number of 2 properties there, which we're hoping to agree with traditional owners to be able to get on and do some initial exploration there this year, and some also quite near the Rio Tinto Amrun, the Amrun deposit, which is also south of Weipa. So still a lot of options to extend the mine life and create a
Are there M&A opportunities for the company considering the current cash position?
Yes, again, I would direct investors back to last year's AGM, where I did talk quite a lot about what we're looking to do from a growth perspective. The reality is that there aren't that many bauxite mines that are out there. I mean, if you're a gold producer today, you could list probably 10 or 20 gold operations that you might have different sizes and different qualities and so on that you might be looking to acquire. But for us, the bauxite sort of M&A horizon is quite limited. So we've just got to be cognizant of that. I mean, if we do see a good opportunity in bauxite, we would follow it. But I don't think, for example, where the high growth is for example, in West Africa, I don't think, Metro brings anything particularly value adding to a mine in West Africa. So we've got to look very carefully at how we can add value, where the synergies are with our existing operation, and that will be the core focus. We'll take the same approach. We think that our core competencies that we've developed at Metro can also be applied to other bulk commodities. So we are looking a little bit outside the bauxite field as well. But again, for example, that could be in mineral sands or in other types of bulk commodity where there's a relatively low processing sort of complexity, but where there might be a very high value in managing logistics, which we see as one of our key core competencies. So we are applying similar rigor and discipline at looking at some of those other bulk commodity opportunities, and again, it'll be all about what value can we add over and above what the current owners may be able to bring, and also sort of really a disciplined due diligence and study approach to that. So look, nothing to be. We're in a process. We're trying to be disciplined about it for sure. The board have a lot of experience in this area. So we'll be bringing forward opportunities as they come through the process.
Now, Simon, more from a macro point of view, how is forecast global bauxite production projected to change during 2026?
Yeah, so we're seeing some changes in bauxite, in the bauxite supply environment. Most of those have already been flagged. I mean, and the largest amount is again coming really from West Africa. I mean, we flagged that we are looking to grow from our sort of 6.2 last year, and we're looking to try and extract the maximum from our 7 million tonne expansion in 2026. Rio Tinto is also from Australia looking at they're starting to build additional capacity down south, but that is basically timed with the closure of some of their older bauxite assets. So there's unlikely to be significant growth out of Australia in the next year or so. And there are some mines that have been sort of restricted in West Africa, particularly in Guinea during 2025. Some of those will likely come on, but also I still suspect that the Guinea government will continue to force compliance with the mining licenses over in Guinea, and will use quite a big stick there to be able to sort of drive that compliance. And as we saw last year, I still expect there to be significant disruption in supply out of Guinea. So look, I think that's where West Africa has been where the growth has come from. I still see that's probably the likely area for growth, but there'll still be significant volatility and uncertainty in the supply coming from there. And of course, it's a long way from the largest traded market, which is in Asia Pacific. And what we're also seeing is a general step up in freight, which obviously in freight rates and demand for bulk freight. So that is having an impact on the cost of delivering bauxite from Guinea to Asia. And of course, that's a disproportionate benefit to our cost structure versus those from West Africa.
Finally, for investors, what are the key catalysts coming up over the next 6 months for the company?
Yeah, so look, we're currently have paused production to do our maintenance work. We generally do that, around about this sort of January, February period. So we're in the middle of that process. We've also looking to streamline the production this year. We've implemented a new integrated planning and management operating system, and that we're looking to try and whilst expanding production to get economies of scale, also become more efficient and effective, and that work is currently underway. So we would expect to start to see some activity back at site in the beginning of March and be able to sort of start production. So this quarter is usually our quietest because of the weather, and that will continue to be that way. And then we're looking for a fast start. We've already got some significant stock on the ground ready to restart. Then we've sort of looking for a fast ramp up in quarter two, and then the sweet spot of our year is the second half of the year, where we have our best weather and the best tides, etc., and the ore tends to be drying out from the rain that it's received in the first quarter. So that tends to be where we're at. And so look, we from our point of view, we're really just trying to extract the maximum out of our 7 million ton expansion. That's always been the strategic focus for us when we went to market in the end of 2022 and put the expansion into play with some lending and so on. So that is going to be our ultimate focus this year. Corporate wise, continue to pay down the debt. We've got a much stronger balance sheet, and with I think the margins that we're going to be able to generate this year, we should be generating some significant cash through that as well. So look, yeah, I think this is where it all comes together in 2026.
Thank you very much, Simon, for updating investors again today, and we look forward to speaking with you again soon.
Been my pleasure. Thank you.